All right. Welcome to the weekly forecast on gold. I could not record this episode yesterday because I was very busy. So let's just dive right in. So I always say whenever you want to analyze a weekly forecast, you are meant to start your analysis from monthly or weekly. Then you have to check what the last candle of the weekly of last week, what it did. So basically, 2 weeks ago, I was pointing this out that market was giving us a bullish. This is bullish hammer. This is an hammer, and then that is signifying that market is not ready to fall anytime soon. And then you can see the results that happened last week. This gave us the results. And last week forecast, I can remember on 4 hours time frame, I was telling us that if it takes me out, if I see a sell setup and it takes me out, then I will give in for the buys. And this is a massive push to the upside. And now what am I expecting this week? Now, where are we seeing a breakout? We are seeing a breakout to the upside, like from this zone. This is a breakout to the upside, signaling that we are still very much bullish. We are very much bullish. But then, does that mean we just keep pushing to the upside? Keep pushing to the upside? No, anything can happen. So always prepare your mind for that. But because we're in a bullish trend, always prepare that if there's a retracement, you are expecting it to retrace to a place where you can buy because you're in a buy trend. Now, there are two things can happen. Either market keeps pushing to the upside, like this, then keep retracing, or market gives us a deep retracement down. Now, a deep retracement to where? Now, from here to here, there's a fair value gap there, and then I can just highlight that and write a fair value gap. I can write a fair value gap here. Yeah, there's a fair value gap there that markets should fill. And aside that, we also have a fair value gap here. And we also have liquidities down here. So there are reasons for markets to come to the downside, but it can't just come to the downside without confirmations on lower time frame. So let's go to daily time frame. Now on daily time frame, you can see something forming here, which is in 2 hours time. If this gives us this is inverted hammer, or you can call it shooting star, inverted hammer. If this gives us inverted hammer, this is signaling that market is likely going to do a retracement into this fair value gap before going to the upside. And we can see that there's an order block at this region that market can come and tap into before we keep pushing to the upside. There's an order block here, so we can see something like this, drop down here, then we keep pushing to the upside, but if the order block does not hold, then we can come and like have a deeper retracement into this zone before we keep pushing to the upside. Either ways, I'm still expecting a retracement first down and then a push to the upside. So these two zones are the key zones we should watch out for. Either you wait for this to happen, or you wait for that to happen. So get yourself prepared for that. Then hopefully, if this ends as shooting star, we can expect that to happen. So let me just quickly delete that and see if we have more reasons to go to the downside. So let's go to 4 hours. Let's see what is currently forming even before that. Now, going to 4 hours, this is a bearish confirmation that the bears are present. This formation is a confirmation that bears are present. It's looking more like evening star, but this body is too big for evening star. But we can call it something more like evening star. And this red candle is showing that the bears are present. So we expect more push to the downside. I think there's a swing low has been taken, so we can come and target these internal range liquidities forming at around 2702 and more. Then if you go to 1 hour time frame, you can see that on 1 hour market has broken this zone. Market broke this zone and this zone, this other block. Market broke it, and after breaking it, market retested it, broke, retested, and now we are falling down to the downside. So where am I expecting market should fall to? I can see that liquidity was taken here, structure was broken here, so this can serve as internal range liquidity. So a drop to 2702 2705 is very possible. And also looking at the structure, we have M and M structure here. This is M, this is an extended M. And looking at an extended M, how can we target where market is going to go to? So just connect this to this, then connect the top to the middle, then put this from here to here. So this is giving us 2712. 2712 is, I'm expecting market to come to 2712, and then we can at least take this liquidity here. So that will be all for this episode, and I will see you in the midweek forecast.